Hey everyone, welcome back to my channel. Today I'm going to talk about some interesting correlations I found when you pair TradingView with the new DEX feature and gamma exposure to take intraday trades, or more importantly, prep for intraday trades. Before we get started, I'll leave several referral codes for trading services I use in the description, including TradingView, Rocket Scooter, and TradingView. That will give us both discounts. Lastly, if you enjoyed this content, don't forget to like and subscribe to help me grow this channel. So with that being said, let's get into this. Now, I talked about this market DEX, this delta exposure feature on about TradingView in a previous video, which I'll make sure I leave a link for. And you can get to this by looking at the market options dashboard and just scroll down from market net flow and you'll find market DEX. Now, just to recap quickly, it is showing us the delta exposure, whether or not there's positive deltas in the market or negative deltas. And if we see positive deltas in the market, that means dealers are short these positions, which I did a whole video about with Options Greek and hedging that I'll encourage you to check out as well. It's very dense, but very important information for reading this sort of stuff. And if you see here, we can see that we've had all these positive deltas in the market, forcing dealers to also buy shares or buy futures in order to hedge the fact that they are short these calls that people are buying, which has helped cause this recent rally that we've seen. You can see when the deltas are negative, we see SPY's price drop. When they go positive, we see SPY's price rise. And we can actually use this. So I want to focus on what happened on the close of the 12th. So we saw these large delta exposures happen. So this means going into the next day that we can typically assume SPY's price to continue moving up. So this was from August 12th, 2022. And just to show quickly what SPY looked like, we can go back here. We could see August 12th, 2022, SPY just essentially after the opening range, we had some market news that happened at 10 a.m., which caused some volatility. And then SPY just proceeded to run. And we see a whole bunch of positive deltas came into the market, indicating that that SPY would continue to run. And I did some back testing in a previous video on this DEX stuff, and it's a really amazing tool for swing trading. But using this information, this means that likely there will be some sort of positive continuation from this going into today. Now, when the market opened, we didn't see what today's delta exposure looked like. We didn't know that we were going to also have another positive day, but we could sort of deduce this from delta exposure. And so what I want to talk about is you can look at this in the morning and you could say, okay, we had positive delta exposure, SPY moved up, we should see a continuation. And now if you go over to the ticker dashboards and click options, you can pull up the SPY options dashboard and just ignore net flow for SPY. That's not what we should be using. We should be using market net flow instead, because net flow for SPY gets skewed because of dealer hedging and things of that nature. And I'm going to do a whole video on dealer Greeks buildups and correlations and everything. But if we just scroll down to the gamma exposure, I found that if we go to the expiration date and we choose the 19th, which is the most recent expiration. This also is the third Friday of the month, so it's a major monthly options expiration event, which I'm not going to get into here, but just pick the Friday expiration. So if this were next week, we would choose 8/26/2022. Following week would be September 2nd, 2022. In this case, we're choosing the closest Friday. Now, this looked different as of this morning. So I'm recording this video on market close, and at the open, this is all based on open interest. So it recalculates at close every single day. And just to show you what that looked like, we can see, took a screenshot of it because I've been using this strategy for a little bit now since delta exposure had come out, and it's extremely interesting to me. And just to be straightforward, I don't have a lot of testing on this. I've just recently have started using this to help plan my trades for the day, and it's become very powerful, and so far it's been very powerful, and I plan to continue using it more and more as time goes on. So you can see this is what the gamma exposure looked like. Now we have a large, so we were opening at, just to go back to SPY's price on the day, so this is today's trading day. Now, of course, none of this had happened yet, and we were opening SPY's price. If we hover over here, we can see the open was at 424.77. And if we look at that gamma exposure that I was referring to, we can see we have a whole ton of gamma exposure at 425, and then we have even more so we have a bunch at 429 and 430. So what this is telling me is that if we can break above 425, I'm looking for several things here. So we also have a bunch of gamma exposure at down here around, this is right at 420, which just seemed too low for as bullish as things have been and for what the delta exposure left off for the day. But my initial plan is I'm either gonna see if price will pull back to 420, and then we'll get a whole bunch of market maker activity to help push us higher and run higher, or if we break above 425, I'm gonna look for a retest in that zone and then look for it to push higher. And then the target above us would be 429 or 430 or somewhere in between there, like 429.50. And I'm basing this off of the gamma exposure, and that's just sort of creating a trade plan for the day, if you will. And so now this looks different. Going into tomorrow, things look a little bit different. There's also FOMC minutes this week, which really throws things off. And that's what I should note. You shouldn't use this strategy around on major macro, the day before major macro economic events like FOMC minutes or CPI data, and certainly not the day of those events, because those numbers can change everything at a moment's notice. And so therefore this works best on days where we don't have any major market news being released. So we have that plan. So what you can do is you can draw, so you can go back a little bit, and if we look at the hourly chart, and we're looking for holds around that 425 level. And so looking at the hourly chart, you can see this candle right here on this hourly chart tells me there was some major market, some major volume, some market maker participation here, that when we came up, we had this strong rejection on high volume that pushed us down the whole day. We did proceed to get back higher, and then we actually broke above it. So now what we're looking for, when in the pre-market we opened below it, and we want to look to see what happens around this level. Now, just worth noting, 420 would have also been if we were pulling back even more. If this pre-market activity kept happening, I'd be looking for some sort of bounce off of 420 if we got there. But again, that's very low. Was unlikely. If we were continue dropping at open, you could even take shorts down to that level as a target, or if we rejected off of 425 at the open, you could have taken shorts there. But again, the delta exposure was positive, so we're looking for a positive day. So let's just drop down to the 5-minute, and having this level. Now what I did is I marked this zone. I marked it 25 cents above that 425 level and 25 cents below that 425 level. So this would be my entry zone. And you can see what happened when we opened. We rapidly moved above it. We started losing some steam. And then on the very next candle, we came down and retest that zone and proceeded to have a big rapid move up. Now, at this point where you see this candle, you see this bottom wick, you see this stronghold out of this zone within this 25 cent range. That's your cue to you can mark it in if you'd like, but that's your cue to get in and to hold that position until you see some indication to get out. Now, this was actually a solid indication to get out because we have this high volume doji, and then we see price start moving down again, which you should be taking profits at this point, and then you can be looking to get back in when we see indications of holds, which we see here and here, assuming that things will continue moving higher. Because if you remember, we were talking about how the target was somewhere around 429.50, and if we look where anywhere from 429 to 430 essentially, and if we look where SPY peaked out for the day, it was right around 429.40. And so all of that was based off that gamma exposure, where not only could we try to determine where we'll see big money step in to push price higher, which is right around this 425 zone, which is actually a good level from the hourly as well, going back to here. But also we have that delta exposure saying that this day is likely going to be positive. So we can combine the two, the delta exposure and the gamma exposure, to try to figure out where big money is going to step in to drive price higher due to their hedging mechanics. And so this is a very interesting way. I haven't had any major down days to test this with yet, and I certainly will test it and continue to post updates to let everyone knows how that goes. And if you noticed it too, what's nice about this actually was a bullish pattern here when I'm not a big pattern trader, but I know many are. You have this sort of wedge that popped off here when we broke above it. That also would have been a great reason to mark it in and just ride that thing all the way up to that target we had predetermined from gamma exposure, with delta exposure telling us it's a positive day, gamma exposure telling us our ideal entry level, along with our profit taking level. And when this move happened, there was just no reason to get out. Around here, you could start getting out because it's chopping around, but we still failed to make a lower low. We never actually broke below this point once we got above it. So that is just a very interesting correlation that I'm going to start looking at every single day. When right before market open, take a look at delta exposure from the day prior to try to gauge overall sentiment on the day, and then look at gamma exposure to gauge not only what ideal entry levels will be, and again, it's gamma exposure with the weekly expiration selected, because if you aggregate it all, it's going to throw off the data. But not only determine what a good entry level will be, but also what a good profit taking level would be. So tomorrow and Wednesday are FOMC days. I'm still going to pay attention to this to see how it holds up. So if we're looking at it, delta exposure was positive, although it wasn't nearly as positive as it was the day prior. So I'm not as convinced we're going to have a bullish day tomorrow. If anything, it kind of tells me it's probably going to be a mean reversion day because it's the day before FOMC minutes. But if we look at the gamma exposure, we can see right around 425 we have a big level. We'll have to see what we open at too, if the price falls in any meaningful way in the pre-market, or if it stays roughly where it's at, because that is something we certainly want to take into consideration. But let's say we opened right around where we're at now, so around that 428 level, we can see, okay, based off this gamma exposure here, we have three big areas. So anywhere from 427 to 428, we could expect to hopefully see market maker step in to push it higher. And then our targets would be 431. And if we somehow break past that, we could even see it go to 435, which is very unlikely. And this tells me it will likely be a slow mean reversion day with big money stepping out, because these targets aren't very far apart. I mean, really, 428 to 431 is 3 points. Nothing major, and that does seem to really correlate with what a FOMC minutes day will be like. So I'll be posting this video after FOMC minutes happens, so we'll know if this actually worked out or not. But again, macroeconomic events typically throw this off, so I'm expecting to be wrong here, but I'll definitely follow up with videos where we don't have major news events like FOMC minutes happening the day before. And then one thing I also want to mention is it's good to pair this with VIX as well. We can see that in the morning, VIX was dropping. If you look at VIX and it's dropping and we're looking for a bullish hold on SPY, that is a very good sign. It ran up in the pre-market and then just proceeded to rapidly drop. That volatility decreasing tells us that SPY should be increasing, which is another reason why we would want to get in calls and hold those. So hopefully you found this interesting and you learned something. Let me know if you have any questions or comments, of course, on Discord, Twitter. I'm sure you can find ways to reach me, but I'd be happy to help. And thanks for watching.